33, 25, 14, 06. Resistance on the upside at 65, 77, 88, 4,000, and then 09. Pivot 54, resistance at 65, 77, 88, 4,000, and 09. Support below at 44, 33, 25, 14, and 06. All right. Welcome some of the new folks that are here. We are trading mini S&Ps, looking for opportunities to scalp the market. We are giving our levels there, looking for setups. We're scalping the market for about 3 or 4 points. And also looking for price action opportunities in addition to the levels that we just gave out to give us our setups. So we have a combination of both giving us our trading opportunities, whether we're going long or short based on support and or resistance. And we are scalping the market, and we base our stops on the volatility that could be in the market or not. Right now, with the market kind of trending back up a little bit, we're looking more at about 3 or 4 points, I think. Should be doable. If anybody has any questions, feel free to ask in the chat. The VIX is trading at around the 25 handle. So, yeah, we're right there. We're definitely in this middle of this range that we created last week due to the bank situation and the concerns about what the Fed is going to do as far as inflation is concerned and contagion with any other banks that might be happening. It's always a concern, especially now we're going global with this situation. So the concern is there and the worry is there, and that's what the market is trading on. All right. Again, so welcome to the new folks that are here. Again, we're looking for scalping opportunities. If anybody has any questions, please feel free to ask in the chat. The Fed, I think, comes out with its decision this week. So it's going to be interesting week in regards to what they are going to do. They were definitely looking at 50 basis point hike before last week, and then after the banking situation, things have kind of settled back down to a quarter, and even some people say maybe nothing. So we shall see what we'll bring up as we quickly rotate back up here. We're looking at the 65 area as our first level of resistance up here on the upside. If you look at the chat window, you will see the levels there that we have printed there for you. They are areas that we're going to focus on. Remember, they're areas, so we're not going to be perfect. So you have to kind of trade according to the volatility and then how the market trades. And you can see here, it's very volatile. Popped right up here to the 65 area here. Very, very thin. There's still 30 lots up and down the ladder ticket, so things are very still kind of moving around quickly. And if you're a little bit risk averse, you have to take that into consideration as we quickly come up here to the 65 area. And whatever we do, you always keep your stops in place. Oh, there we go. That was nice. Very nice. All right, so there is 3, 4, at least 5 points, depending on your scaling in and out. Well, that was unexpected. Very nice little quick opportunity there for us. And then if you have multiple contracts, you're definitely getting more than 3 or 4 points out of this trade. All right, nice little trade there to begin the day, and hopefully you were able to get in as a short there because that's our first resistance area. So that would be a short technically, and you got a quick rotation there off of that level. And if we get down to 54, I'll probably cover some here. If you're trying to stay short here against that nice quick level, that was a nice little opportunity. But if you got short, this is where I would like to cover them right in here. If you were able to stay short, I should say. So nice little quick opportunity there if you did jump in. And a nice little quick scalping opportunity against our 65 area. Again, we're looking for easily 3 or 4 points. We can easily take a little bit more than that. Obviously, on this trade, this is where you are liking the fact that you can get in, scale out, and then this one is a no-brainer to take a little bit more. And if you just took your 2 or 3 points, 3 or 4 points, that's fine too. Nothing wrong with that at all. And we'll look for the next opportunity. Let's see here. Let's see what. All right. So again, we suggested you cover them down there, and if you did, that's fine. If you're trying to stay short, nothing wrong with that. Our first support level on the downside is down at the 44 area. If I knew we were going to get back down there, I would have told you. Sometimes I don't know, but it was a nice quick rotation off of that area there with very little heat. You just got filled on 65. So in case some of you had the 65 area, you got filled. So that was very nice. Bond yield on the 10 is down to 337. Just a continuation of the yields just going down, down, down very fast. And this is why you're having a banking situation that's a problem, simply because you cannot have these quick rotations in these markets and have the banks kind of understand how that's how they make their money. You know what I'm saying? So yeah, that was a nice little trade there. We did go right down to 47 was our settlement price there. If you were watching, that's another quick, nice little opportunity there for some of us who like the settlement price trade, and was also our green band there. All right, so nice little trade there against our first resistance area there against the 60. They don't always work that way. I wish I could tell you they always work that way, but they don't always work that way. And first support level is down at the 44. And again, no matter what, we always keep our stops in place. And hopefully you were able to jump in, take a little trade, take a little bit of cash out of that trade, and then we'll see what happens next. Right? That's all we can do. We're not trying to guess direction here. We are just trading ebbs and flows. This is what we do. We're coming back up here to our pivot, so we're kind of neutral here as far as what we are looking at. Got to be a little bit careful there against 44, only because we got down to 47 and change there. Would have been nice if we quickly dipped down to 44 and rotated back up. So if you're more risk averse, and especially if you made a little bit of some nice money on the trade here against the 465 area, maybe be careful there against the 44. So we give you our levels, and then you do have to look at the price action to kind of help you decide the next opportunity and how the market trades. You have to look at price action to determine the risk involved in the next level. Like I think the 44 level right now would be a little bit riskier just because of the price action. But again, it's not like it's not a good level. It's just a matter of we would have liked to have gotten it on this last rotation and get a nice this nice pop back up. So I don't even know if we're going to go retest it or not. I'm just saying that it's become a little bit more riskier. So keep that in mind if you're trading. And we'll see back up. So now we're kind of flat. Hopefully you're flat. I mean, if anything, we were short from the 65, but then we had a nice rotation off of it. We did not get triggered down at 44. We were looking for a buy area down there. but we did not get down there. Even if you scale around it, my first scale would be at 45, but never got down there. And now we're coming back up here. So right now, this is what I call the no trade zone here, right? Because we got trigger on the top side. We rotated off of it very nicely. We had a nice opportunities to make a little bit of money, and now we're just kind of floating back up here a little bit. 65 already got triggered, so we're not going to use that. We're probably looking at the 77 above as our next level of resistance. Okay. So bond yields 337 on the 10s. Again, this is a very, very dramatic move here in the bond market. And again, this is why the banking and the banking system is a little bit of turmoil, right? They're not. This is not volatility like this in the bond market is not something that it's hard to hedge against, right? Because a week ago you were hedging the other way. Now you get this rotation down here, so definitely have to be understanding of what's going on and be careful. Let me see that. No, you should be seeing the screen. Can Allison? Can you see the charts on the screen? And can you hear my voice? There are 3 charts on the screen. From right to left, there's a 5-minute E-mini chart, and middle is a hourly ES chart, E-mini chart, and on the left is a 30-year bond chart. Those are the 3 charts we have up, and you can hear my voice, maybe. I don't know. Hoping. I see your question. I'm trying to answer your question. I don't know if you can hear me or not. Now, again, we were just kind of getting back into this range here. Looking up on top would be looking at the 77. If you're a little aggressive, there's the levels again in the chat. All right, we're coming back down here to the pivot, so kind of neutral again. If anybody has any questions, feel free to ask in the chat. And if you look at the chat, you'll see the levels that we have that we gave out this morning. We're going to use those as a guide to the day. All right. Yeah, the charts that you see have couple moving averages on there. Well, not really, just a couple, just one. A 200-day moving average, which is the green band. The blue band is the a Bollinger Band that we use. We feel that the Bollinger Band uh, does well for us as far as giving us opportunities to trade. We use the Bollinger Band in our methodology, and it helps us. The red bands are just the extension of the Bollinger Bands. They're really not. We don't use them as much as maybe some people would. So the red bands are just there, honestly, to add a little bit of color to the charts because they're kind of boring if I just had black and white. I don't use the blue band. So in case you ask, there Bollinger Bands is the blue band, which is what we like to use and incorporate into our methodology, trading methodology. And the green band is a 200 moving average, which again, it's another a trading tool that we use to help us with our setups. So we're using all of those to help us with finding opportunities to enter our trades and trade around them, and giving us the setups that we would like to find in our training day. We did have if you looked at our charts there, if you look at the chat box, I should say, you'll see the levels that we just gave out when the market opened up. And those levels are there to help us find the areas of inflection that we believe the market will uh, kind of rotate and give us a scalping opportunity. That's what we are doing here everyday basis. We're scalping the market, and you can see here, if you look at the chat, our first level of resistance was at the 65 area, and we had a nice rotation off of that 65 area to the downside. The resistance areas would be sell areas, and support levels would be buy areas. All right, we're definitely bouncing around here, this little range that we created once the market opened up. And now we're just kind of floating back and forth both sides of our pivot here. A Bollinger Band, that's what the blue band is. A Bollinger Band, have you ever heard of Bollinger Bands? It's a trading tool that created to average or something that he put in that works very nicely for what we do. Some mathematical equation that these math guys came up with. All right, again, we are kind of just going in a little bit of a range. We had a nice rotation against our first resistance area. Again, we already tested the 65 area, so it'd be a little bit more riskier to take the trade now. We're looking on the upside more at the 77 area. All right, we're just kind of hanging up here against the first resistance area. Again, we're not using this level right now. We're looking at the 77 level above as our next level that we'll be focused in on. Again, patience is important in this game, finding opportunities to scalp the market based on levels and whatever price action opportunities occur. And sometimes they do occur more often than others. We like to average about 4 to 5 trades a day. I think that's a good focus. And also we're looking at the morning hours for our trading opportunities. Again, we also feel that the morning hours, the dynamics in the morning, gives us good ebbs and flows for the work that we do and the methodology that we implement. All right, it's kind of trying to uptick again. The 65, like I said, we're not taking it this time around, but simply because we already used it and had a nice rotation off of it. Looking at the 77 is our next level that we'll focus in on. So we have no numbers coming out this morning. The market is absorbing what's going on with the banking situation, very fluid. You heard over the weekend that there's going to be kind of a bank bailout between UBS and Credit Suisse, which the governments are trying to take care of the situation. All right, we're just kind of hanging up here in high. So we have to, the market has to deal with the banking situation. And again, with the interest rate situation going as crazy as it's been going, that's why you can see that the banking industry is having a little bit of tough time managing the risk. The Fed was supposed to raise 50 basis points prior to last week, and now they've toned it down to 25. And we'll see if they even go there. So another wild weekend is seeing regulators attempt to stave off a bank crisis that's quickly spreading across the global markets. An emergency deal brokered by SWIFT authorities. UBS agreed to scoop up long-time rivals Credit Suisse for $3.25 billion, which was less than half of the latter's market valuation at the close of trading day on Friday. Without a deal, Credit Suisse would have likely collapsed this week, spreading further financial contagion that began in the United States with the implosion of Silicon Valley Bank and Signature Bank. And First Republic is also facing trouble with the additional cuts to its rating. As the market continues to uptick here, we're looking at the 77 areas or next level of resistance. By swallowing it up, Credit Suisse, the bank has the opportunity to scale up materially and instantaneously, bringing on significant additional AUMs and AUSs. No idea what that means. What is it? What that's what UBS would be gaining. I also know that they're gaining a lot of debt. That's another story. All right, the market continues to uptick. Looking at the 77, I have no idea what AUM and AUSs are. Operational leverage and significant synergies that could be delivered would be exceptionally high, and UBS would likely only need to pay a token amount for those opportunities. So, they're getting a good deal here for them, and if they can figure out their financial issue, they could do well, I think is what they're trying to say. We'll continue to uptick. Looking at the 77 area here is our next level of resistance. And it's an area, like I said before, we kind of scale around it. If anybody has any questions, feel free to ask in the chat. We don't mind questions. Market sentiment turned for the better following the emergency rescue, which would limit contagion throughout the financial system, only to drop lower by things that were when things were fully digested. With big losses on top for shareholders and bondholders, the Fed, the ECB, and other major central banks coordinated action to ensure dollar liquidity, while the Swiss National Bank promised access to liquidity facilities for both banks involved in the transactions. In pre-market trading, UBS and Credit Suisse opened down a lot, but then they came back as the market kind of opened up here. We shall see as we continue to uptick. Looking at the 77 area here, some resistance. Again, we're not trying to figure direction, so that's not what we are trying to do here. Trying to trade, we're just trying to trade ebbs and flows of the market and try to take a few ticks, a few points out of these markets when they give us that opportunity, like they did earlier. Right now, if you're trying to get long, we've got support down at the 60 area. All right, so we're up here on these highs. So where's Buffett in all this? Billionaire investor Warren Buffett has reportedly been in contact with senior officials in the Biden administration in recent days regarding the regional banking crisis. Note that the Oracle of Omaha has been a savior in the banking sector before. The chairman of Berkshire Hathaway invested $5 billion in Bank America in 2011, which he cleaned up on as he tried to bolster the banks due to losses tied to subprime mortgages, and also came to the aid of Goldman Sachs in 2008, which again he completely got for double his money in like a month. So he's not getting in unless he knows he can make tons of money. It's amazing. Amazing what you can do when you're liquid. All right, we continue to kind of stay strong here. We're looking at the 77. We have no numbers coming out this morning. Again, whatever you do, make sure you keep your stops in place. We had a nice rotation against that first resistance area there at 65, and right off the kind of around the morning hours, right when the morning bell, I should say, opened up. And now we've had to be a little bit of patient, show some patience here as the market now continues moving forward. It was chopping around there earlier, all over the place on the downside. For those of you who trade the 74, love the 74. That's all I can say. Something about that 74 it's always solid. Just saying. Ask me what it is about 74. Is that some type rule? What's that? What? Yeah, we just have this like thing here about the 74 level that always seems to give us a nice opportunity to trade. Technically, technically there was no real good reason to trade it. It just seems like the 74 works for us uh, over the years. It doesn't matter where we're at, when we're at. It just seems like it always works for us. So I know it doesn't make sense, right? I can't give you a logical reason why 74 would be 74, but it just seems to work for us. So we don't ask questions. We just trade it. We try not to figure out what's going on here. We're not that smart. Right? We just kind of take what the market gives us and look for the next opportunity. All right. Well, I knew 74 was going to work so well, and I know some of you took 74. That's all I can say, because I did. Again, it's a scale, right? So if I took 74, to be honest with you, I'm taking 77 also, right? I mean, I'm not just taking the 74 and that's it. I would have had to scale in all the way up to 77 and above that too. So again, it's a matter of risk, how you manage it. Everybody here deals with risk differently. And so you got to keep that in mind. We have still support around the 60 area if you are looking for support. Again, that's what the market is telling us. As we quickly come down to the 60 area here, if you're looking for a little buying opportunity. All right. Again, as you could see, if you were going to buy the 60 area, you had to buy. It's an area, right? You'd have to buy around it because we're not going to be perfect. As you can see, went down to 60 and change. Oh, we got down below 60 there. I did get it got down to 15 and 9.25. So good. I'm glad because I had my 61s and 60, and I didn't realize I got filled on all of them. And you have to. My point is that you have to have your orders in place so that you can take advantage of that quick flush down to 59.25. And so now you're getting a nice rotation here against it. So if you were patient and we're looking for a buying opportunity, you just got one. We got definitely our 3 points here. You got 4 points on them because it got up to almost 65 before. So you got a nice little quick rotation against the 60 area, but you had to have your orders in place, as you can see, because it flashed down there for a second and rotated back up. I didn't even realize it went down to 59.25. So that was a nice little quick trade there. And so if you did have your 60 in place, you got filled very nicely and you got a nice rotation. All right, Dudley, good to have you back. Again, we scalped it. That's all we're trying to do. We got 3 or 4 points out of that trade. And we would look for the next opportunity. Obviously, right now, if you're going to buy the 60, it's a lot riskier. We've done well this morning. At least I hope some people have done well. We had our first level of resistance there. If you see the chat, the 65 area there got triggered. We did not get triggered on the downside. We tried to get up to 77. We didn't, but we had a little buy area here at 60 just a little bit ago. And we dipped down to it. And so that was a nice little quick trade. And that 60 was a price action opportunity. It was created once the market painted some bars. So that was not part of the levels that we gave out this morning, but it was definitely a price action opportunity. Oh, perfect. All right. All right. Dudley, you see the levels there for you that we have. All right. We had a little support at the 60 area if we were looking to get long. And that worked out very nicely for some of us who were looking to get long. Again, there's price action opportunities. Obviously, that 60 area was not part of the original levels, but the price action opportunities did give us that area. You have to look at what the market is doing once market paints and bars to give you more opportunities. Again, these dynamics work better in the morning than they do in the afternoon. The afternoon trades is a little bit different. There's reaction to news is a little bit different, and because the number of traders are in there are different. So there's a whole bunch of different little types of things to look at before you trade in the afternoon versus the morning. My thing is that we trade the morning because the dynamics work better and our methodology works better for us in the morning hours. And by the way, I always did like going out to the West Coast whenever we did our shows out in our live shows in Vegas there, and we got up like at I don't know 4 o'clock, 6 o'clock, 5 o'clock there to do. Well, we had the bond opening where we had to do the bond opening, which is different, but you had the whole day. Once you're done working, like at noon, it's or early. You'd be done at 9 o'clock. They have the whole day to do whatever. It's a good thing about the West Coast or the left coast. Anyway, all right. So we had looking. If you were looking to jump in, You did okay. There you go. That's good too. So you get to sleep late. Unless you're trading, of course. Even on the East Coast it's the opposite. Like you don't start trading until 9 o'clock, 9:30 here. Here we're in Chicago. We start like at 8:30, so it's a good time. I think it's kind of in the middle, literally. But it is what it is. I guess you just get used to it, right? I was in Florida for a couple days there, and I had to. And I always like brought it back to Chicago time. So, okay, 9 o'clock meeting. Oh, it's 8 o'clock meeting. That's pretty. I mean, 9 o'clock is pretty late for me. But then I thought about it in Chicago time. I was like, oh, it's only 8 o'clock. That's pretty early. But then again, okay, I'm just talking here. All right, we nice pop there. Support level. Now we're coming into this range game here again. We don't like to trade the range games. Not our favorite situation. So we should just be a little bit patient. Look at the 77. Now again, 77. I mean, we did get up to 74, which is, like I said, for those of you who like the 74, it worked out again very nicely. All right, let's see here. So the odds of a 75 basis point, a 25 basis point hike is 75%, and there's a 25% basis point of a 25% chance of a 50 basis point hike. That's still on the table. So opinions are divided on the tactics that the central bank should be given in the recent events. Bank of America forecasts the target range between for the Fed to be 25 basis points between 475 and 5. So we'll see what. So that is going to be determined this week. I think it's going to be on Wednesday, if I'm not mistaken. Just trying to check here to make sure, but I think it's going to be Wednesday. I think that's when they're going to come out with their decision. All right, we getting a little bit choppy here. Again, we are kind of flat. If you're a little aggressive, I can't. Looking at the downside support there would be at 44. We'll just stick with that right now. Again, like I said, if you're aggressive, pivot a little support, but not my favorite. Again, there's different levels of risk in every trade, and you have to kind of know or to kind of try to decipher which is a little bit more riskier than others, and as well understand that when you do decide which is riskier than others, then you have to know your risk tolerance and then trade that accordingly. So that's what we try to do here. We try to work with people to help them understand their risk tolerance, find the risk in the trades that we're trading, and then trade them accordingly. We have an education course that helps you with that in case anybody is interested in trying to learn a little different style maybe than you're used to, right? Not every style is the same. So, all right, again, we always have to show some patience in what we are trying to do here. So, all right, we're rotating back up here. We're looking at the 77 area next. There's a little level of resistance. And again, if anybody has any questions, feel free to ask in the chat. Yes, my friend is back. Okay, not happy. How does the mentoring work? We have the mentoring works in this Zoom room. What we do is we use live charts to help us explain some of the setups that we would teach, and we kind of work with each individual to help them understand what the setup, how to find it, what it means, what the risk involved in it is, how to manage that risk once you get in it, and how to trade out of these different trades and opportunities that the market might give us. So it's more hands-on with each individual to try to make sure that you do get to understand how to find the setup, and then why it would work, and then how to recognize that setup when it is developed or created on the charts, and then getting into that trade based on your risk tolerance, because everybody has different risk tolerances here, and try to maximize profit for each individual on the individualized basis. So it's more hands-on with each individual than kind of, but we do it in this venue in the Zoom here, and we also like to use live charts to help us with the finding those opportunities and trades versus just using stuff that we can print out to make it look good. All right, we're coming back up here to the highs. We're looking at the 77 area next. If you look at the chat box, you will see the levels we gave out this morning. Again, we put out those levels, and then we can tweak those. We can adjust those a little bit. Not everything is etched in stone. It all depends on the price action and the movement of the trade in any given moment in time. Sometimes we have to tweak them a little bit, maybe make an adjustment to them. And again, those things are there because of how the market reacts around an area.